Hey everyone, welcome back to Corporate Decoder, the place where we decode the confusing world of corporate filings. And today we're diving into Intel's latest report where things got very interesting with the US government. Intel, the chip giant, made a big announcement on August 27th, 2025 that changes their relationship with the US Department of Commerce regarding government funding. This is all tied to the CHIPS Act, a program designed to boost American semiconductor manufacturing. Basically, Intel and the Department of Commerce signed a new deal that changes the terms of a previous funding agreement. This new deal, called the Implementing Amendment to Direct Funding Agreement, or DFA Amendment for short, significantly loosens up the requirements for Intel regarding the money they received. Think of it like this: Intel got a big loan from the government, and now some of the tricky repayment or performance conditions have been made much simpler. So what exactly changed? A major change is the removal of specific project milestones and other conditions that Intel had to meet to get the money. Intel had to prove they spent at least a whopping $7.865 billion on approved projects already. That's a massive chunk of change, showing Intel is serious about investing in these chip-making initiatives. Another big one is that Intel no longer has to share a percentage of its profits from these funded projects with the Department of Commerce. Before, if the projects were super successful and made more money than expected, Intel would have to give some of that extra cash back to the government. Now that obligation is gone, meaning Intel gets to keep all the upside from those successful projects. This is a huge win for Intel's bottom line. They also got rid of most of the rules about how they manage their workforce, as long as they are still following general laws. This gives Intel more flexibility in how they hire and manage their employees for these projects. And pretty much most other restrictions have been lifted, which is a common theme here, making things easier for Intel. But it's not like Intel gets a completely free pass. There are still crucial restrictions. For example, Intel cannot use the money from the CHIPS Act to pay dividends to its shareholders or to buy back its own stock. This is a really important point. The CHIPS Act money is meant to build manufacturing capacity and create jobs, not to directly reward investors through buybacks or dividends. The government wants to ensure the investment stays focused on its original purpose. Another major restriction is they can't engage in change of control deals with specific prohibited entities or foreign entities of concern. This likely means the US government wants to keep sensitive technology and manufacturing controlled by entities they trust and that align with US national security interests. So even with the changes, some big rules remain. Intel still can't expand its chip manufacturing into certain foreign countries. They also can't do joint research or licensing deals with certain foreign entities. And as mentioned, the money can't be used for facilities outside the US or for those dividends and stock buybacks. These remaining restrictions show the government's continued focus on bringing chip production back to, or keeping it within the United States and preventing technology from falling into the wrong hands. Now, let's talk about what actually happened on the closing date, August 27, 2025. Intel received a massive immediate payout of $5.695 billion. That's a serious injection of capital. In exchange for this huge sum and the relaxed terms, Intel gave the Department of Commerce a substantial amount of its stock, over 2074 million shares. They also issued a warrant, which is like an option to buy more stock later, for another 2040 million shares. On top of that, they put another 158 million shares into an escrow account. These escrowed shares will be released as the US government makes future payments under another program. So the government is getting a significant stake in Intel, both now and potentially in the future, as a form of investment in the company's growth and its role in crucial US manufacturing. It's important to remember that these details are summaries. The full legal agreements are much longer and more complex, and the filing points to Exhibit 10 ALM for the complete DFA amendment. This is the actual legal document that spells out all the new terms, signed by both Intel and the Department of Commerce. So what does this all mean? Intel gets a massive cash infusion and much more freedom on how to use it, which is fantastic for their operational flexibility and strategic investments in semiconductor production. They are essentially upgrading their partnership with the US government from a highly regulated grant to something more akin to a secured investment where the government gets equity. On one hand, this deal shows a huge vote of confidence from the US government in Intel's ability to execute its ambitious plans to rebuild US semiconductor manufacturing. The government is willing to take on risk by taking equity instead of just imposing strict rules, seeing Intel as a critical piece of national security infrastructure. However, the restrictions that remain are key. Intel can't use this money for stock buybacks or dividends, which is a clear signal that the public money is intended for building factories and creating jobs, not boosting share prices directly. This aligns with the overall goal of the CHIPS Act to strengthen domestic chip production. The government is essentially betting on Intel's long-term success to deliver on national objectives, and their equity stake means they'll participate in that success. The risk for Intel is that if they fail to meet the core obligations like expanding capacity in the US or adhering to the foreign entity restrictions, they could be forced to repay the awards. For investors, this deal signifies a major government partnership that provides substantial funding and strategic alignment but locks Intel into specific business practices related to the CHIPS Act. It's a trade-off between financial flexibility and national strategic imperatives. Right, that's our breakdown of Intel's latest filing and this significant government deal. What's your take on these numbers and what they signal for the company's future? What do you think about the government taking equity instead of just imposing strict rules? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives into corporate world. Don't forget to check out our Discord community linked in the description for more in-depth discussions. Thanks for watching. See you next time.